All right. Thank you so much for joining in the live session. We will be starting the session in less than 30 seconds. All right. Hello, everyone. I am Kavita Agrawal, and today we are here to discuss in our Let's Get Technical series about our July trades. Why are we doing this? Swing trading is a high risk, high return method of trading. Here, the objective is very simple to take a limited amount of capital, churn it multiple times, and make good returns. The objective is to make returns which not only beat the market, but beat the market with a high amount of margin. Now, it is only possible to do this if we are diligent in our continuous improvement and review system. So I personally have been swing trading full time for the last 3 years. And over the last 3 years, I have been making massive improvements in my timing of entry and exit based on the stocks which have been selected with a strategic entry uh, uh, technical indicators, right? Strategic setting on technical indicators. Now, knowing strategies and knowing when to enter, when to exit is not enough. We need to always keep making improvements to see how can we save that extra point which we have lost, or how can we uh, capture that extra point which we could not because of early exit. So in order to continuously improve, I always go back at the end of the month and do an analysis of my past trades. Now, maintaining trade tracker, analyzing your trades, these are things which I have discussed multiple times in the past sessions. And a lot of you have asked me repeatedly how to do this, to give you advice and tips on how you can do this too. So today's session is going to be about doing this review system, and I'm going to take you through that in detailed manner. So I'll share my screen, and if I can just have someone in the comments confirm that you're able to hear and see me properly, it will be great. We have Vinayji. Vinayji, hello to you and welcome to the live session. All right, let's see. So here it is. So this is the stock ideas master sheet, which I use to basically distribute stock ideas to my active members who basically subscribe to my swing trading plans. Now, in this, I have already filtered for you the stock ideas which have been closed in the month of July. Not that have been started in the month of July, but which have been closed out in the month of July. So as you can see, we have made around 82% of cumulative gains, and when done on a weighted average method, because as you can also see here, I also give my members advice on how much they should allocate. So if I allocate these percentage gains according to the way they have moved, it comes to around 5% for the month, right? Nifty this month has moved up by around 2.4%, if I'm right. That is in the month of July. And the stock ideas that I gave for swing trading have moved this much. Now take a look at the average holding period. The average holding period in some of the stocks has been relatively low. The green here indicates the stocks which achieved target, whereas the LTP here shows the price at which we exited. The spot shows the price where we entered, and stop loss target was the setup. Now for every stock idea, I also tell members what is the risk reward ratio that they are participating in. Now, what is important here is this. Now that these stock ideas are closed and you can see the dates on which the stock ideas were closed, what is important is this section. What is it telling us? The LTP basically stands for last traded price, which means, okay, so Azar, you can visit my free Telegram channel and I will give you more information shortly. Now, the LTP stands for the last traded price. So this is the price of the stock right now at this moment, right? And this column AH gives us the reality. What does it tell us? What is the last traded price right now compared to the price we exited the stock at? So PVR Inox, for instance, we can clearly see because of this metric that PVR went ahead and achieved our stop loss, our target. However, we exited the stock at nearly 1% profit. So something definitely went wrong here. Even though we did not make a loss on this entry, something went wrong which kept us away from making the 17% gain. And we could have made the 17% gain, and I'll tell you in how long. Um, this stock idea was started in 22nd June and today is 10th. So less than 2 months, we could have made this 17% gain. So we'll check now on charts what went wrong. But first, let's identify few more stock ideas that we can do this analysis on, right? Now we can also see what has been the LTP divided by high. So we can see the stock is very close to the high right now, and it has moved nearly 1% this week. Okay, this tells us a lot of good information that we need to know. Now, what we can also see here is the next stock, that is National Aluminum. So in National Aluminum, again, we almost exited at cost. So naturally the stop loss got triggered, but the target has been achieved. And this was given on 3rd July. Now is August. So basically in a matter of 2 months, the stock achieved 14% target. So this is clearly showing us that our entries have been pretty good, but there is something going on in the exit side. We'll see what went wrong in National Aluminum as well. Next is the cigarette stock, Philip. And we can see that again, the target was achieved and good profit was also booked. So starting 14th of July, we booked 18% profit in this, in the stock of Philip. However, the stock continued to go on 12.5% higher after our exit. So what happened? Did we get greedy, or did our stop loss trigger too soon, or did we get fearful that we might lose this profit? That's why we exited too soon. We'll check it out. So there are more stocks as you can see here, but there are also good stocks. For instance, Nelco. We booked 15% profit, 16% profits in Nelco after just 3 days of holding, as you can see here, right? So I gave the call to my subscribers in Nelco, and I can do that because I'm a SEBI registered analyst and in compliance. So I gave the stock idea in Nelco. It went up 15%. We booked a profit, and the fall and the stock then fell down 8%. So good execution there. And then we can also see here HDFC, Havels. Then there is this Hinzing. All of these were good. So for now, let's do a deeper dive into PVR Inox, where we did not make any money. National Aluminum also, where we did a good entry but did not make money, even though our target was achieved. The Philip stock, Godfrey Phillips, I think it's called, 18% profits, but we did miss 12%. So we'll see what went wrong. And if we have time, we'll look at more stocks. Now I'm going to pull my chart for you. All right, first stock first, PVR Inox. We'll take a look at the 15-minute, we'll start with the 75-minute time frame. Now, here you can see the entire trade setup. Basically, this tiny little white pin that you're seeing is the point where I initiated the stock idea. And you can see how it was as good as entering the stock right at the low. Now, I will not get into the details of why I chose this stock idea, or rather why not. So the first thing I started off was with drawing the trend lines on the weekly time frame. Now, when I went to the daily time frame, I can clearly see that there is this spiky little support, which at the end of or during the COVID low led to a strong rally in the stock of PVR. Now, some people will think that the support from this spiky little low comes at 700, but that is not true. You have to look at which trend line it is respecting. And here we can see that the stock had come very close to that trend line, right? Now, this was the first evidence that the stock had come very close to the trend line. The second evidence was that the stock came close to the trend line here, right? And then it forged a higher high for the first time in a very long time. Now, then this was our second evidence. Now look what happened. When the stock on the 70, now we move to the 75-minute time frame, and on the 75-minute time frame, we can see that when the stock started falling here, it started breaching the level of 30 repeatedly on the 75-minute RSI. That indicated to us that there is a strong bear trend in motion, and it is expected to continue. Eventually, the stock not only started taking support at the level of 30, but the RSI also started showing what we call a positive divergence. This positive divergence, even when the stock continues to make lower lows, is a sign that reversal is due. All I had to do was wait for the perfect entry moment. And I got that on the when I studied the combination of the 75-minute and the 15-minute time frame. So here you can see the entry was finally made when the 15-minute RSI also gave a positive divergence. So this was the first time when the positive divergence came, but I was not convinced because in my past analysis I have seen that when the 15-minute continues to breach deep below the level of 30, it is still weak, right? So I'll just show this to you. You can see how deep below the level of 30 this is. This is a warning sign. Versus this point where we decided to enter, the breach below 30 is not massive. So we could have trusted this, and that's what we did. Now, as I said, this is the pin where I gave the stock idea, right? So this is where the first positive divergence was formed, and then the positive divergence continued to form because the price came down to retest this low. See, this is also called stop loss hunting, because even for somebody who's trading a positive divergence, when the stock goes up below this high, they will usually tend to revise their stop loss right here. And you see what has happened? This is called stop loss hunting, right? Because the analysis which you're doing using RSI and chart, some big hand is also doing that. So all they have to do is drive the price lower, capture all of those stop losses, get immense supply at low price, and then the price shoots up because the demand starts building in. So here this was the point. Now the stop loss that we gave initially was kept in mind, keeping this possibility of the low. So the stop loss was decided on the basis of the previous low, which was somewhere around the level of 1345. Only after the price had sustained above the most recent high, that is once it sustained above the level of 1400, did we go ahead and revise the stop loss. Now I can clearly see what went wrong. As you can see, the stop loss here got triggered, right? What went wrong was that there was fear in me that this is a highly risky call. Why? Because the stock had already declined significantly right before. So it was 38% decline before this rally actually began. So when this first breakout here happened, I got very excited. And as a result of that excitement, and in a desire to not lose the profits which I was making. So you can see, including this upward spike that happened, the stock actually moved up 6% from the position. Now I expected this rally to continue. As a result of that, I was a little impatient in revising my stop loss to this low, right? This low. So when I did that, the stock basically took my position out. However, the stock, as you can see, has continued to rally upwards and gained 18% profits, 18% target. Now, what did we learn from all of the story? Number one, the entry setup that we are using is completely correct. So stick to it. Number two, when revising stop losses, especially for volatile stocks, we need to put more skin in the game. Trailing stop loss too closely in volatile stocks like PVR, Inox is not a good idea. And if we feel the need to trail the stop losses so quickly, it is better not to participate in volatile stocks. But since we are participating, we will next time choose to sustain or work with bigger stop losses. Instead of revising stop losses when spikes like this happen, we will revise stop losses when sustained move like this happen to protect our position from unnecessary whiplash. These were just the few of the points that I think will help me make better trades in stock, same stock PVR Inox, because it is a very good stock for swing trading, but also other stocks which have a similar profile of personality, as I like to call, as PVR Inox. So that's our first stock done. Now, if anybody found that analysis useful, I would love if you could give a thumbs up to this live stream and leave a kind comment. Also, if you're interested in getting stock ideas identified on the basis of this analysis, all you have to do is join me on Telegram. Now, to join me on Telegram, simply go on Telegram and search EXP-Invest in. When you search that and hit enter, you will automatically be directed to my Telegram channel and you can join in. For your comfort, I will also put the link in the comments. Moving on to the next stock. Our next stock is National Aluminum, which is a good comparison because again, it's a metal stock versus the previous one, which was a entertainment or movie stock. So this is a metal stock, and we know metal stock has been in strong rally. So what happened, despite of having a trade setup and a timely entry, how is it that our position got exited at just 0% profit? It's good that we didn't incur loss, but where is the 14% profit which the market was willing to give us? Let's go and take a look at the charts. All right. Again, we have the trade setup present. I'm going to delete this tiny little channel which helps us, and we can see that again, let's go a little bit bigger. So we can see that our entry was perfect. Our entry was again perfect right before a big leg of upswing started. National Aluminum is also one of the very good stocks for swing trading. As you can see, the swings are pretty neat, well defined. The stocks goes up significantly, comes down significantly, giving us good entry exit opportunities. So then why miss the profit? Let's do a diagnosis of this. So the entry setup is not, the entry setup in this case was simple. The underlying trend here is clearly already bullish by the time it came on our radar. Now, the analysis for a stock which is continuing a bull trend is different from a stock which is coming out of a bear trend. In this case, we are looking for continuation signals. Now, the 75-minute time frame turned super bullish back in back in September, exactly on 22nd, with a strong positive divergence, which led to a RSI range shift. If you're interested in knowing what RSI range shift is, simply go to the archives and look at my video on RSI range shift. Now, here you can see that the trend turned bullish, but the price kept taking resistance near this level. Here, this green zone and this blue trend line, this continuously kept acting as the resistance. Despite of that, there is this gray line which is passing through, which is the 500 EMA of the 75-minute time frame. This was acting as a support and it was very evident. So what we did was, when the price took support from here again, we went down to the 15-minute time frame and we spotted a massive positive divergence, which told us that, you know what, this stock is good for entry. And I expected the momentum to be strong, so I did not want to exit it. As a result of that, what I did was I gave the stock idea to my members, even though RSI was above the level of 60. A practice I usually don't indulge in. This I would say, stepping out of my principles is what probably spooked me into trailing this stock very, very closely. So as you can see, this red line right here, this red line is the trailing stop loss, and this is where I went wrong. So when the stock basically started breaching these tiny little highs, I took it as a sign that the stock is going to keep going in the similar momentum. That is not what happened. Now, because we were trading the 75-minute time frame, we should have used a more significant top, for instance, this top, to, we should have waited for this top or this resistance to get breached before we changed our stop loss. Now, because I was impatient and I was a little in my head, I had a bias or you can say a foreign thought created that I have stepped out of my own trading principle. That created fear in my mind, which led to aggressive stop loss setting, unnecessary trigger, early exit of a perfect setup, and miss of a massive upside. Let's see how much the stock moved up after our exit. It went up around 14 to 16%. So had we stayed in the stock, we could have easily captured at least, so see, of the 16%, and capturing the whole 16% is never going to be possible. But with the way we trade, we could have captured at least 10% of the stock very easily. Now, if somebody else is holding the stock, I would suggest you book your profits. It looks like it's going to go in for a swing correction. Now, talking about the next stock. So, okay, going back, what did we learn, right? What did we learn from this analysis? Very simple lesson. Again, this analysis also emphasized that the entry points are happening on spot, but something's wrong with the stop loss trailing methodology. What is getting wrong is if we are improvising, right? If we are improvising, the fear is making us aggressive. This stop loss that I had set here, knowing myself and my style of working, I know for a fact I refer to the 3-minute time frame to set it, because it is on the 3-minute time frame that I can see these peaks more clearly. They are barely visible as individual peaks on the 15-minute time frame. That is also one big mistake that I made. I should not have referred to these tiny little peaks. I should have referred to this major peak and taken that as a resistance, right? Rather than taking this as a breakout. So this is not a valid enough breakout, right? This is not a valid enough breakout. This is a valid breakout, and we should have waited for this before we revise our stop loss so high. How this would have progressed in a better manner would have been if we set the initial stop loss here, right? Basically, if given the positive divergence, if the price would have created a lower low below this level, then it was prudent to exit. So that would have given us an initial stop loss of around 2%, and our target was 14% set from the beginning, which was somewhere around this level of 95. It was a very good risk reward ratio of 7. We had no reason to worry at all, right? So basically, the stop loss from here should have been revised when the price went above this high. Why this high? Because we can clearly see that when we entered the stock, or when I gave the stock idea here at this point around 83 rupees, the most recent peak right before this pin was the level of 86. And you can also see that the market recognized this resistance. And how can you see it? You can see it in the volumes. The volume is magnificent when this massive breakout has come out. Also, the price has taken a resistance right at this level, taken a tiny little dip, taken a support at the 100 EMA, and then shoot. Okay. So next time when we participate in a stock idea, once we have participated, we need to stick to our stop loss revision rule. That's a note to myself, and next time when I'm giving stock ideas to my members, it is going to achieve the target. Moving on, Godfrey Phillips. So what happened here? We booked 18% profits in a matter of 13 days, which is great, but we could have made even more. So let's go and see what stole this 12.4% extra profit from us and how we could have captured it still. Godfrey Phillips. All right, again here on the 75-minute time frame, we can see. So Godfrey Phillips was again in a massive uptrend. In 127 days, it had delivered almost 100% returns between 7th of September to 17th of January. So clearly the underlying momentum was very, very good. Now, when the momentum is usually so strong and the price breaches above the level of 200, and this is something I have repeated in my previous sessions, when the price has come above the level of 200 EMA after spending some time below it, as we can see here, it has a tendency to come and take a correction. Come give a correction, take support at this 200 EMA, as you can see it did right here, and give a strong bounce. So what happened here was that when I gave the stock idea on Philip, okay, now I remember what happened. So initially when I gave the stock idea, the original target was 1816, right? Because usually these corrections, even though this is a fantastic stock even for long term, I was a little skeptical that a strong second rally is going to come. So I got scared. So I set initially a very small target. However, just let's see how many days into the stock idea, just 2 weeks into the stock idea, there was a massive gap up in this stock. It was a 10% gap up. Now, because of the 10% gap up, the target was overachieved. I mean, the target, there was a gap up and the target was missed. So anybody who had set a GPT order or a target bracket order, their order was not triggered. Now, I was extremely thrilled that the target had been overachieved, and that is the reason why I asked my members to close the stock idea at the level of 1920, right? However, I should have used, so instead of getting emotional, and by emotional I mean getting very happy that a stock had over exceeded the target by many percentages, I should have used rationality. I should have looked for the nearest plausible trailing stop loss and continue to stay in the trend, because we know that when a stock moves, gives such a big gap up with such high volumes, it means something, and usually such rallies are also sustainable. So what would have been a good trailing stop loss for this level? When the market opened here, considering the nearest low, nearest peak was this, we should have basically moved our stop loss to our target level of 1920. Now, in that moment, it looked a lot because that meant giving away all the 5% profit which was coming into the stock. But that 5% risk would have put us in a position where our target, which was our second target, which was still 18% away, could have been achieved in the stock idea. So next time when I buy a stock which is fundamentally as strong as Godfrey Phillips, and I experience a gap up above the target or a massive gap up with a massive volume uptick, I am going to control my biases and let greed out of the window, while focus on finding the best next stop loss level to revise, and let the stock stretch its leg. Let the stock rally. The stock market wants to give us money. We are the ones standing in our own ways. That is what this particular stock idea teaches me, and this is the learning I'm going to take from this execution. Okay, so none of my live sessions are ever complete without helping you with your stock queries. So I'm going to take the next 15 minutes to help you and answer, look at the stocks where you have positions. If you can also mention the holding price or the buying price, it'll be great. And I will look at the charts and use my skills to help you determine what you should do next. So with that, let's take a look at the comments. And we have some really nice comments from a lot of people. Thank you so much for your kindness. Let's go and see. Okay. So we have Anshu. He's got AU Bank at 750. You know what I say for banks, right? I trade a lot in banks, but as you can clearly see, I can clearly see there is a negative range shift in banks. You need to get out of banks, my friends. See, the rally doesn't stay in any one sector. It keeps coming and it keeps going. Banks have had their chance. They are all in correction now. So, and not just banks, finance stocks in general are expected to get in correction, whereas other sectors which have not been in rally for a while are now coming into momentum again. So for this stock, see, if you would have asked me about AU Bank long back, I would have told you to maintain a stop loss of 736. But clearly, the stock is already below that level and 5% below that level. So what should you do now? So have you mentioned 750? So that means your position is not that much in loss, but there is clearly negative range shift happening on 75 and 15-minute time frame both. Okay, also, okay, it hasn't started in daily time frame, but there is a big negative divergence, and negative divergence is the first sign of a pending RSI range shift. So RSI bearish or bullish range shift happens when there is a reversal and then a continuation into a trend. So basically, if the bull trend reverses into correction, there will be a negative divergence. And if the bear trend, or rather the correction, turns into a full-fledged bear trend, then the RSI will start oscillating in the bear range, right? So basically, the negative divergences that we see on between RSI and price are the starting points of these potential range shifts, right? So here we can see there is a RSI negative divergence, but we have to wait for the RSI to touch the level of 30 or go below it to determine a range shift on the daily time frame. But 75-minute time frame, what I can see is that the negative range shift has already happened, right? Yes, it has definitely happened, and the 15-minute time frame is absolutely bearish now. Okay, so for you, since the first stop loss has been missed, and considering that I am kind of bearish on stocks, but specifically for AU Bank, I think this is a potential support level, right? Because you can see there is this 200 EMA lying out here. So I would suggest you wait for the stock to take support at it, and but if the stock breaches the support, then you should exit. So please maintain the stop loss at the level of 670 here. For anybody who might be considering a fresh long entry in AU Bank, I would not recommend doing that. All right, so another inquiry by Rupam for AU Bank, I have already answered. So Umesh G has Aarti Drugs, he bought at 586. 586. So bought almost recently. I hope you did not buy it in this spike, because this spike was clearly the end of the bull run, or as I like to call it, a distribution phase. So actually the trend is very, very bullish as per the daily and the 75-minute time frame, and for more sustainable trading, we prefer to take the signals of the 75 and daily time frame over the 15-minute time frame, right? So 15-minute time frame is showing this negative divergence, which could just be, you know, the indication of the stock wanting to take a breather after having so much run up. I think you should continue to hold your positions in RT drugs, because the 75 and the daily time frame are very, very bullish. There can be some, you know, downside move, but it's okay. Don't worry. This support which the price has taken on the 100 EMA looks pretty good to me. I would expect the price to not breach this support, because this line is still there. So I would suggest you maintain a stop loss at the level of around 552, 553, and continue to hold RT drugs for a target of 700 easily. See, the pharma and healthcare sector is experiencing a maddening rally. And in fact, if you go back to my market outlook sessions, which where, you know, I was doing a lot of sector analysis, I have been telling this rally is coming since February, and this rally actually started in March. So sector analysis is something that I share with everybody on my Friday sessions, which is now hosted only on my YouTube channel. So be sure that you see those. Moving on to the next stock. All right, let's see. We have a question by Mr. Mahesh. He wants to know if Pedilite is set for fresh entry. Okay, let's check it out. Uh, no. Actually, Pedilite is a stock that I also do active trading in, but I don't think it is suitable for a fresh entry right now. And Maheshji, if you're a subscriber, then whenever this stock becomes attractive again, you will see a stock idea in it. We have Rajiv Mittal, and he's asking about VBL current level for long term. See, VBL is evergreen for long term investment. Just look at that beautiful rally that is happening, and this rally keeps getting stronger. Though for the short term, the stock might take a little bit of a correction. And if you want to make fresh entry, then wait for the stock, let it come to 770 level rather than buying right away. So that is approximately 5-6% lower from current market price, and you will have a good long-term stock. Now, if you want long-term stock ideas, don't forget to, like, I also offer long-term stock ideas picked purely technically in, of course, fundamentally strong stocks. So if you want, you can also check that out. The holding period in those stock ideas is more than 1 year. Now we have Mohammed, he's asking RBA. RBA he's holding since 117 price. So the stock is at 117, and what I am seeing here is very, very interesting. RBA is the restaurants brand Asia. It's a consumer services. Okay, all right, let's see. Okay, for long term, I would not recommend the stock right now. For the short term, it is not giving me a lot of confidence because of this gray line, which is a 500 EMA on the daily time frame, and it is clearly acting as a resistance here. Now, if the stock breaks out above the level of 127, I might then be more willing to take a position. But I think I have much better stocks in my arsenal than RBA for a short term and long term trading. So I will not recommend participating in this stock right now, at least as per my analysis. Next stock, who do we have next? We've done Mr. Umesh. Mahir is asking about RVNL. Interesting choice of query. I like the stock, and I think the stock will give another leg. So see, this stock is a very peculiar movement style. It gives massive spiky movements, big corrections, another massive spiky movement, another big correction. So as long as this trend line, this blue trend line that you're seeing, as long as this blue trend line is intact, I think it's a good idea to hold RVNL and keep buying it. So basically that gives you a stop loss at the level of around 116. So if you're holding RVNL, be prepared to have big targets and big losses, right? So just because, and a good risk reward ratio also. So it's very hard to set a target on RVNL, but the closest target that I can give you is around 25% up at the level of 156, 157 with a stop loss of 116 at a market price of 127. So your stop loss is around 7% and your target is around 24-25%. So that's a risk reward ratio of more than 3. So thumbs up from my side. Sandeep ji is asking for view on clean sign. Sandeep ji, I will need you to mention whether you're holding the stock or not and a price with that. All right, we have an inquiry on Trent by Mr. Subramaniam. So I see Trent. Oh, so Trent was actually part of my, it was on my radar, but I clearly missed it because as I can see, the stock has gone 10% and I've not given a stock idea. So this also happens that, you know, you come up with a strategy, you create a watch list, but then some stocks just move too fast. Even if you manage to capture some stocks, you end up exiting them too fast. So, you know, making money in the stock market is really just a factor of how much improvement you're willing to put in. So I can see that because I delayed and I waited for some more confirmations, I've clearly missed a 10% rally. Now, however, it is not a good idea to make a fresh entry because we don't chase rallies, right? We lean on our analysis to enter stocks before the rally, as you saw in most of the stock ideas that I showed you today. So if you're somebody who has an active position, you will need to maintain a stop loss. Unfortunately, I cannot give you a small stop loss. You will have to maintain at least 5% stop loss at the level of 1787 or 85 would be a good level, and continue to hold the stock for long term also, because the momentum of this rally has been fantastic and it is expected to continue. So also the volume has been really strong. You see, the last time this kind of volume came up, it was at the beginning of a trend, which gives me an idea that I'm going to go on the 15-minute time frame and I'm going to study how 15-minute chart behaved when the stock kept taking dips. I can see that the 15-minute time frame was indeed coming down to the level of 40-30. So I'm going to set an alert at that level. So the next time the stock is around there, I might have an opportunity to still enter the stock, because this to me looks like the beginning of a massive upside, not very different from the one that we've already seen between 7th of February to 4th of July. So in a matter of 146 days, the stock rallied nearly 44%. That's fantastic rally, right? All right. Moving on. Sajanji, welcome back to the live session. Makes my day to see you. All right, let's see Birla Soft. Okay, wonderful rally in Birla Soft. Very good stock for long-term investment and swing trading also. And I think the rally that is going on has a target at the level of around 490. But I wouldn't be surprised if this target is breached and the next trendline resistance of 705, 700 is also achieved. So good job holding Birla Soft, Sajanji, and keep holding it with a stop loss at the level of 420. Wait. Oh, okay. Yeah, Sajanji, thank you for that tip. I wish I had seen your message sooner, unfortunately. But anyway, you guys could hear me, so that's fine. Kanakraj thank you for the educative session on easing out emotions over technicals and logic. Thank you so much for your kindness, Kanakraj. Always a pleasure to see you in the live sessions. Last talk of the day, I think we have Zomato. Actually, let me just see whether I've covered all the questions. Okay, we have few more questions. We'll cover them before we leave. All right, so covering Zomato, wonderful rally. So as you can see, I had entered the stock right at the bottom in my client's accounts, made a 50% profit, but then I did not re-enter when the stock came here, even though I identified the as RSI positive divergence, because I just didn't feel confident, and as a result of that, look at what I missed. 113%. It's okay, happens. But now, should you enter Zomato? Oh my God, Zomato is looking extremely, extremely good. You know what? I'm going to set an alert for it to come down to the level of 30, because I still have a little bit of incy trust issues with the stock. Usually stocks which crash like that after IPOs don't bring out a lot of confidence in me, right? So would I take a fresh entry right now in Zomato? I would not. I would like to see it come down somewhere near the level of 85 to take an entry. If you are holding Zomato, unfortunately, you cannot afford to hold it with a smaller stop loss of 82, 83, right? But if you want to make a fresh entry, then I would give you the same advice which I'm going to follow for myself. Hold off on that thought, because if you entered right now, your stop loss would be 12%, my friend. That's a massive stop loss to be okay with for a swing trade. Even if you have an upside of 50, sorry, your target would be around 122. So your upside is around 33% from what I can see. However, the risk reward ratio is not that great. I mean, sure, it edges on 3, but it's not exactly above it. So, when we start breaking rules, it's a downward slope. It's a slippery slope. We don't want to do that. So, since the risk reward ratio is less than 3 and the stop loss level is more than 5%, I am not interested in this setup and I would not recommend you to be interested either. Now, we have a question about Tata Elxsi by Mr. Mahesh. So, let's go into Tata Elxsi. All right, Tata Elxsi. So see, Tata Elxsi is another evergreen stock for long-term investments. And in fact, a lot of IT stocks are still very attractive for long-term investments, including and not limited to Wipro. Now, Tata Elxsi, for instance, from a short-term perspective, since you haven't mentioned, okay, near 200 EMA, how should we analyze a fresh entry? So Tata Elxsi. So what I can see is that a massive range shift happened right here on the 3rd of April and the stock has become very bullish. And clearly the stock has now come back down to the support zone, right? And there is a 200 EMA on the daily time frame as you pointed out. Now let's go down to the 15-minute time frame, and on the 15-minute time frame we can see a positive divergence is getting formed, but it's not completely ready. So if you want to buy Tata Elxsi, what you can do is you can start buying it in small quantity, because right now we don't know exactly where the bottom is going to get forged. So it's a good candidate for making small entries, but you should also maintain a stop loss at the level of 6,900. Okay. Sometimes stocks don't give us very clear cut entry points. They just give us the indication that, hey, you know what, I got into a bull trend and I started taking correction, but I might just get back into the bull trend again. So when a stock is being a little elusive, it's a good idea to make small entries rather than a lump sum investment. We have Rajiv Ji asking about Voltas. Again, very strong, very good rally unfolding in Voltas, and I expect the rally to continue because you can see the volume is picking up in a big way. So if you're holding Voltas, then I would suggest that you maintain a stop loss at the level of 810, right? And the stop loss will need to be revised when the price goes above the level of 868. And I maintain these resistance and support levels basically by using these parallel channels with alert. Now we have Sequent Scientific inquiry by Mohammed. And the sequence, Mohammed, you haven't indicated whether you want me to analyze for fresh entry or current holding. So I'm gonna have to do both. And it looks like the stock is trying to come out of a massive correction, but it's not helping us with a lot of information. One positive thing is that it has not only broken above the level of 200, it's also taken a good support and bounced back up. So that gives us some good indication. And on the 75-minute time frame, it looks like the stock has gone back to the bull range from the bear range it was in, right? So we can see the bear range was here, but this section gives us a warning because here also the stock had given us a temporary indication that it might be getting bullish by going over the level of 70, but then went into another leg of correction. See, personally, I don't find Sequent as one of those stocks which, if Sequent were a person, I wouldn't be friends with it. I know it's a weird thing to say, but the reason I'm saying it is that I really believe each stock has a personality, and it's not a very distinct personality, but it's distinct enough to be able to categorize them, right? Sequent is one of those stocks which has a personality which I don't get, meaning it has a chart development using the same indicators which I have expertise in, but the way it behaves or tackles them, I am not comfortable. I don't get it. Okay. So if it were a person, basically I wouldn't be friends with it. So I am sorry, I'm not much help. It does look bullish, but it doesn't give me the confidence at all. I guess if it moved above the level of 113, 114, I might feel confident, but I might, still not feel as confident as I want to. Now, Prakash ji is asking for analysis of UPL. Um, hmm. So, see, UPL is a very good swing trading stock, and in the past, I have had very good swing trades, and I've made a lot of money in this. But right now, there is this diamond formation here, right? The reason why I might be bullish on UPL, if at all, would be because this stock belongs to chemicals agriculture sector. Now, I am of the belief that this sector is going to be the next one in terms of a positive churn. So I have quite a few picks in the chemical sector, and I'm expecting a nice bottom catch there. However, the stock of UPL had given a positive divergence on the weekly time frame, but now the RSI has already come back to the level of 30, and like there is a way of identifying whether the target of the positive negative divergence and positive divergence has been achieved, and in my opinion UPL has already achieved that. Okay, first point. Second point, if you see the 75-minute time frame, there is a big positive divergence. Also, the price is hovering very close to this entire support zone. Okay. So I think there is reasonable evidence to take a long position in UPL, right? Now, you have to have a sufficient enough stop loss, and 578 would be a sufficient stop loss for me. So with that, we can enter into a long position with a massive target of around, the first target should be somewhere near the, sorry about that, the first target should be somewhere near the level of 12%, and the second target can be as high as 30%, with the third target still being 40%. And this stock has the potential to unleash into a new high also. Okay, so with that, I have nicely extended the session by 10 minutes, and I must take your leave now. But if you liked this session, please don't forget to join me next Tuesday also, where I will bring to you Retail Traders session. That's actually a webinar where I bring to you knowledgeable topics about related to technical analysis in stock market and help you learn things with a more practical approach rather than just covering the theories, right? And every Thursday I do this Let's Get Technical series where I study my past trades, draw lessons from them, share those with you, learn for myself, become better myself, and help you become better too. Now, if you are somebody who would rather bypass all of this analysis and do swing trading on the basis of my trade setups, then please don't forget to join my Telegram channel, which I have already linked in the comments. With this, I will take your leave. Thank you so much for giving me your time, attention, and joining this live session. I will see you again on my YouTube channel on Friday, where I post the market outlook, and on Tuesday in the live session. Namaste.